Go to CommSec now. We're joined by Tom Piotrowski. Is all well on the markets this morning, Tom?
Pete, we're going to start with a little bit of a setback, down by around 0.4%. So it'll be quite valuable to see where the initial impulse comes from as far as the local market is concerned. We've got a number of balancing items at the moment. On the one hand, this week will bring with it a number of outcomes which will just remind us of the challenges that the Australian economy has faced over the course of the recent lockdowns. They'll come most acutely in the form of the unemployment report on Thursday. We've got the NAB survey of business conditions and confidence released tomorrow. To a reasonable extent, they are backward-looking outcomes. The market is actually quite focused on the reopening of the Australian economy, which is likely to happen over the course of the near term. So, again, these will be reflected in the price action of the market and the way that the different sectors perform as well. So, to that end, we saw US markets end on a low note last week, down by around 0.8%. The S&P 500 had its worst weekly performance since June, so it was down by around 1.7% over the course of that week. Our own market down 1.5%. So it'll be a question of where the positive momentum comes from. Resource stocks were under the pump last week. They might have a better start to the week, at least this week, given the fact that metals prices tended to be a little bit better at the end of last week. Copper and aluminium did quite well. Aluminium up 11% last week. Although a bit of a fly in the ointment is the iron ore price. It continues to struggle. It's down by about 11% over the course of the previous week. The fact that it's now around $128 per tonne might be closer to that area where it consolidates. And indeed, during this week, we'll have a raft of economic news out of China. If that's on the softer side of things, that might actually be helpful for iron ore because it might give rise to a conversation about the Chinese potentially supporting their economy a little bit more.
OK, Tom Piotrowski, thank you.